4 straight days of gains during the 5 trading days of the week. This is a great change in our market where we start seeing more and more positivity on the charts, yet we still see a lot of negativity in the headlines. So we're going to talk about everything that happened this week. We're going to talk about Trump, we're going to talk about tariffs, we're going to talk about China and Japan, we're going to talk about Waymo, Intel, Nvidia, even more. We're going to look at the charts, and yes, I'm traveling again. So we're going to do this in my portable studio. Let's dive in. Hi everyone, I'm Micha Stocks, and on this channel we talk about stocks, we talk about the market, we talk about events that happened, and just a quick reminder that everything and anything that you see on this channel is not financial advice. It's just for entertainment and educational purposes only. If you're new, it would be amazing if you can just subscribe to the channel and turn notifications on. We have over 6,000 subscribers on this channel getting a weekly update on what is going on in the market. And when I'm talking about the market, this is what I'm talking about. NASDAQ up 9% for the week. S&P up 7% for the week. Russell up 6.2% for the week. And the Dow Jones up 5% of the week. I remind you, everything is bearish, right? Look at technology, up 8%, consumer discretionary up 6.5%, and communication up 4.6%. The only sector that ended on the red is staples, which is for bad times. This is the crypto market. Ethereum up 13% and Bitcoin up 7%. I want to focus your eye on this chart showing that in the crypto market, just like in the stock market, you need to be invested and not, if you don't know how to trade, don't even try. And why? If you've missed the 22 to the 23 of April, you've missed most of the gains. As you can see, we got to a point that we're almost at the same price, meaning that if you try to time it without the right tools, I'm not saying trading is good or bad, I'm just saying you need the right tools to be successful, you just lost that gain, whether it's 13% or 7%. So just keep that in the back of your mind. Commodities, nothing special here, only silver up 0.5% for the week. And finally, we got the Magnificent 8. Finally, they're magnificent and not lousy. Tesla up 18% for the week, Broadcom up 12%, even Apple up 6%, and Apple was the worst performer, and it's up 6%. Let's dive into the news, and we will start with the negativity. The Economist, April 5th, April 12th, April 19th, April 26th, everything is bad, everything is negative on The Economist, which usually is a good sign for us to take the other side of the trade. AAII, 55.6% of the people that were surveyed, this is the American Association of Individual Investors, 55.6% are negative for the next 6 months. Then why is the market up? You think it's a bear market rally? It doesn't have any phenomena of bear market rally except the word rally. That's the only phenomena that you have there. This is the 8th or the 10th consecutive week of negativity. This is something that was never in history. And I remind you that we haven't crashed yet. Yes, we're down, but it's not a crash. There were worse crashes than this. That's how things are crazy. And the Trump administration is trying to cool everyone and say, guys, it's not that bad. This week they said they don't have an intention to fire Fed Jerome Powell. They also said that they're in advanced talks with Japan, India, China. So hopefully the market is sensing that the end for this tariff tantrum is close. Trump and Zelensky have met a few hours ago in the Vatican. A lot of leaders are in the Vatican for the Pope's ceremony. These are the companies that reported this week. The major ones that impacted the market were Google at the end of the week, Alphabet, which had a very, very, very strong earnings, showing that there's no reduction in demand and that Google is on pace toward their plans. We had Intel with their new CEO who laid out or started laying out his vision and his plans, and it doesn't seem that Intel employees would like that vision and those plans, because you're going to see later he's going to reduce 20% of them. Tesla had a very bad earnings, yet the stock went up. And why? Because maybe all the negativity and even more is already inside the stock, and actually there is green light, or actually the light at the end of the tunnel, happening in 30 something days when robotaxi will be launched in Austin powered by Tesla. So we will see that. Beside that, airlines are hesitant to give guidance, and you'll see in a second why, and other companies as well. And this is the reason most of the companies, most of the CEOs in the last 30 days mentioned tariffs. Look how many times they mentioned that on 2024 earnings call, and look how much they mentioned it this year. And uncertainty. Most of CEOs are uncertain about the future, and they're afraid of tariffs. And that's it. And once that's the situation, they're not able to provide guidance. They're not able to see too much ahead. And that's impacting their future projection. It's not impacting their business. That's the whole interesting idea. So the way I see it is the following. When you report earnings, there are kind of two time frames for those reports. One is what happened. What happened are facts, right? We sold X amount, our revenue is this, our income is that. Easy to calculate, it's math. Next thing is to project what's going to happen in the next few months. Projection is very, very difficult. Why? Uncertainty and tariffs. Yet the business is still operating. The consumer doesn't have uncertainty or tariffs in mind. If they want to buy something, they buy it. If they want to book a flight, they'll book a flight. So the fact that companies are not giving clear forecasts is or might be an opportunity. Now, having said that, some of them might be impacted by tariffs, and then their income or earnings would be impacted by it. But they don't even know by how much. So right now they're taking the worst scenario possible, which means that everything or anything that will happen or might happen would be better. Think about that when you look at the earnings this season. Trump administration laid out a roadmap to speed up tariffs. I think they're also frustrated. Trump was sure that he would just say tariffs, every country would call him, and tariffs would be, it's a deal that can be closed in a second, yet it's a bit more complicated than that. And Trump administration, I'm not sure they were really expecting that. So now they're creating that roadmap to speed it up. Volkswagen and Uber are launching long-term strategic partnership to deploy autonomous ID bus vehicle in the Uber platform that will enable Uber to also provide autonomous taxis, just like Waymo. Amazon and Nvidia say that the AI data center demand is not slowing down. We don't know who says it's slowing down. None of the companies are saying. Google as well didn't say that. Donald Trump said that we're very close to a deal with Japan and a deal with China. China says there's no one stocking with us. A lot of mess. We'll probably hear in the next few weeks the deals that will be struck. And this was all across Twitter. Everyone's talking about the Zweig Breath Trust. So a quick explanation: advanced decline. There's a calculation if you divide and then subtract. You do some kind of mathematical equation between advanced stocks and decline stocks and the S&P. You get to a specific number. If that number hits, it means that it's a good time to buy the S&P. I'm giving you the short version of that. You can just ask ChatGPT for this Zweig breath and it knows everything. That marked this week an opportunity to buy the S&P. Taking that another step forward, super Zweig. Again, everyone's looking for a sign to buy with confidence. So Super Zweig also came back and said buying the S&P was the right thing. I will just give you one number to remember and 1% to remember. Whether it's going to happen again, I don't know, because past results are not indicative to future results. But I'll tell you this: 100% of the time when it triggered, S&P 500 was up double digits a year later. It doesn't mean that it's not going to be volatile, but it means that is the history. That's why everyone's excited that it triggered. Meta is laying off 100 of employees on their reality labs. You know how Mark Zuckerberg loves his VR, AR glasses, yet he's focusing that unit to be a lot more lean and mean. Waymo is reporting 250,000 paid robo-taxi rides per week. This is an amazing number, by the way. China is considering suspending their tariffs 125%. That might be part of the negotiation with the US. While Apple is planning on moving all their production from China to India. This is, of course, a big blow to China, and they will try to prevent it. And that is also a pressure point for the negotiation. We talked about that. White House is very angry at the Europe for fining Meta and Apple with hundreds of billions of dollars of fine because Europe doesn't innovate, they just regulate. And Walmart, Target, and Home Depot, their CEOs met Donald Trump this week, and they urged him to get these tariffs behind us, because they're saying, look, we can't import stuff from China, which means that cargo ships are coming in empty, which means that shelves are going to be with low inventory. Everyone's looking at the holiday season, at the shopping at the holiday season, saying there's not going to be enough inventory, and that will slow down the economy and maybe even put it in a recession. Google and Palantir are collaborating to bring the Google Cloud to FedStrat. That's very interesting for both companies, and of course it puts Palantir as a very dominant AI company. Eli Lilly sued and won telehealth sites that are selling the compound GLP-1s. We talked about the fine, 500 million, sorry, I said billion, million pound, euro, why am I saying pound? 500 million euro and 200 million euro. Intel is unveiling their groundbreaking auto chip in a strategic collaboration at the Shanghai Auto Show, while releasing or planning to release 20% of their workforce. And last but not least, Google, as part of their monopoly case, is probably going to need to strip out Chrome from underneath Google if they lose the case. And companies are starting to line up. Yahoo wants to acquire it. Microsoft OpenAI wants to acquire it. It's going to be very interesting, the end of everything around Google, if Google is going to be split or stripped down or not. There is also a question, will it increase their market cap or actually decrease by combining both entities? Okay, let's look at next week, because those were the news of this week. Next week, and I'm going to start with this chart. I'll explain what you're seeing right now, because this is a very important chart. This chart shows the buyback authorization for companies. As you can see, year to date, we got 19% increase in authorization for buybacks. Why is that important? Up until Monday or Friday, actually, there was a blackout window of a few weeks that companies were not able to buy back their stock. We get that incremental buyer back into the market. When they come back to the market, that automatically creates another buying opportunity. So every dip, now the companies say, oh, okay, my stock went down, I'll buy it now as part of my buyback program. Just like Google this week announced a $70 billion buyback program. That's a buyer that buys for $70 billion. That's why this is an exciting chart. And the reason why it's good for stocks is, why do they buy their stocks? When you look at the EPS, earnings per share, it takes the earnings divided by the amount of outstanding shares. If you reduce the amount of outstanding shares, because of the way the calculation is, automatically you increase your EPS. If you increase your EPS, then if the stock stays the same price, you become cheaper in a PE multiple. So that's the reason why it's an important buyer. We have a slew of earnings. You can see from Monday, we get from Domino's, MGM, Waste Management, NXPI, and Nucor. Tuesday, Fintech, SoFi, PayPal. We get UPS, JetBlue, Pfizer, and others. We hear from Visa, Snap, and Starbucks as well. On Wednesday, we hear from Humana, Caterpillar, and of course, after the close, we hear from Microsoft, Meta, and Robinhood, Qualcomm. Thursday, Eli Lilly, Roblox, CVS, MasterCard, and after the close, we hear from Amazon, Apple, Riot, Airbnb, and Reddit. And on Friday, Fubo, Exxon. A very big earnings week, with the end of April and the beginning of May. This brings us to the economic calendar, which shows that Wednesday, before the bell, we get the PCE, the inflation measurement that the Fed prefers, and on Friday we get non-farm payrolls. that brings us directly to the S&P 500 as it's shown through Japanese candlesticks. You can see 1, 2, 3, 4 days of gains. We left behind a gap. We know that about 80% of the gaps are closed. What I will show you right now is where I see the challenges for the market right now. First of all, we have a gap here that we need to close at about 55.80 all the way to 5600. So probably we'll get some kind of rejection at around 5600. Then we might see a correction down to this gap. So we're going from gap to gap. Then we might see a correction down to this gap. This would be in a Fibonacci scale. Fibonacci is a mathematician, an Italian mathematician that found a recurring event, a mathematical recurring event that a lot of technical analysts use. Might correct 50% of this gain, and that would bring us around the area of gap. So expect volatility, that's what I'm trying to say. Expect volatility this week, a bit up and then down, and then we might go up. But the good news is the following. Basically, we are now changing the trend from highs that are going down and lows that are going down, meaning lower highs, lower lows, to higher highs and higher lows. As you can understand, this trend is a downward trend, and this trend, if we continue it, is an upward slope trend, which is good. It means that we are changing the way the trend exists beforehand, and that is of course a good sign for anyone here that is long on the market, which I hope that most of you are. Again, not financial advice, that's the way I see the market. I hope you enjoyed it from my traveling studio. I hope you enjoyed this weekly summary. I will be back next week from the regular studio, I assume. Till next time, don't forget to like and smash that like button and subscribe to the channel. Bye-bye.